The doji is a significant indicator in the world of trading, symbolizing a state of indecision among traders. It is characterized by a candlestick that has an almost identical opening and closing price, which makes its body appear as a thin line. This scenario occurs when the market's bullish and bearish forces are in equilibrium, suggesting that a movement in either direction could be imminent. Understanding the doji and its variations, such as the dragonfly doji, gravestone doji, and four-price doji, is crucial for traders. Each variation offers insights into market sentiment and potential reversals or continuations in price trends. For instance, a dragonfly doji at the end of a downtrend may signal a bullish reversal, while a gravestone doji after an uptrend might indicate bearish sentiment. We encourage traders to incorporate the doji into their trading strategies, experimenting with its variations in different market conditions. By analyzing its appearance in various setups, traders can enhance their ability to predict shifts in market dynamics. Finally, the ever-changing nature of financial markets underscores the importance of continuous learning and the need to adapt trading strategies over time. Mastery of indicators like the doji is a step toward becoming a more proficient trader, but staying informed about new tools, techniques, and market trends is equally important. Openness to learning and flexibility in approach can significantly improve a trader's chances of success in the competitive world of trading. Candlestick patterns are a cornerstone of technical analysis, serving as a visual tool for traders to interpret market sentiment and potential price movements. These patterns, composed of individual candles, represent price data over specific time frames, including the opening, closing, high, and low prices. Their unique shapes and formations offer insights into the psychological state of the market, enabling traders to make informed decisions. Among these patterns, the Marubozu stands out as a distinctive and powerful indicator. Characterized by its full-bodied form with little or no wicks, the Marubozu conveys a strong market sentiment. A green or white Marubozu indicates that buyers controlled the price from the opening bell to the close, reflecting strong buying pressure. Conversely, a red or black Marubozu suggests sellers dominated the session, signaling strong selling pressure. The absence of wicks in a Marubozu pattern demonstrates the dominance of one side, either buyers or sellers, throughout the trading session. This provides a clear signal of the prevailing market momentum, guiding traders on potential future price movements. Understanding the implications of a Marubozu candle within the context of market trends and other technical indicators can be a valuable asset in crafting a robust trading strategy. The Marubozu candlestick pattern is a significant indicator in technical analysis, which displays a strong market sentiment in a particular direction. This pattern features a candlestick that has a full body with little to no wicks at either end, demonstrating a robust and unchallenged market move during the candle's formation period. When we describe a candlestick as having a full body, it means the opening and closing prices of the stock, currency, or asset are at the extreme ends of the trading range for that period. With minimal or no wicks, it indicates that the price moved decidedly from open to close, either upward or downward, without significant retracement. Imagine a chart where each candlestick represents a day's trading activity. A Marubozu candle in this context could appear as a long, solid block, perhaps dark green for a bullish movement where the opening price was the day's low and the closing price was the day's high. For a bearish Marubozu, Picture a solid red block indicating that the asset opened at the high of the day and closed at the low, with sellers dominating the trading session from start to finish. The presence of a Marubozu candlestick can convey much about market sentiment at a glance. In bullish scenarios, it suggests buyers were so aggressive that prices rose consistently throughout the period without ever dipping back down. Conversely, a bearish Marubozu indicates sellers were in full control, pushing prices lower throughout the entire session. While visuals of actual charts and Marubozu patterns cannot be provided here, imagine these scenarios within the context of market graphs. A bullish Marubozu in a chart filled with fluctuating candlesticks could stand out as a towering figure, a green beacon of strong buying pressure. On the flip side, amidst a landscape of varied trading patterns, a bearish Marubozu may appear as a formidable red warning of significant selling activity, suggesting the bears are in control. Understanding and recognizing the Marubozu pattern can be invaluable for traders and analysts, as it offers clear signals about market dynamics and potential future movements. Remember, while powerful, no single pattern should be used in isolation for making trading decisions. To spot a Marubozu on a chart, it is essential to focus on its distinguishable features such as shape, size, color, and particularly the absence or near absence of wicks. The Marubozu candle is recognized for its full-bodied appearance, which essentially means it has a significant difference between its opening and closing prices, creating a wide body. This difference highlights strong buying or selling pressure, depending on the direction of the trade. A key characteristic of the Marubozu candle is the absence or nearly invisible wicks at both ends. Generally, in a typical candlestick, wicks represent price rejection or the difference between the high or low and the open or close price. However, in a Marubozu, the absence of wicks implies that the market has sustained buying or selling interest throughout the session without significant moves in the opposite direction. When observing the color of the Marubozu, a green or white candle signifies strong buying pressure, indicating that the price closed significantly higher than it opened. This type of Marubozu suggests bullish market conditions. Conversely, a red or black Marubozu, where the closing price is much lower than the opening price, signals bearish conditions with dominant selling pressure. To illustrate typical Marubozu formations, imagine looking at a chart and seeing a long, solid green candle with no visible upper or lower wick. This would represent a bullish Marubozu, indicating a day where buyers were in control from the opening to the closing bell. In contrast, a long, solid red candle without wicks would symbolize a bearish Marubozu, showing that sellers dominated the trading session. Marubozu candles can appear in different market conditions, but they are most informative when seen at the reversal points or as part of trending patterns. For example, a bullish Marubozu at the end of a downtrend can signal a potent reversal, while in an uptrend, it may confirm the continuation of buying momentum. It's these characteristics that make the Marubozu a valuable tool for traders seeking to understand market sentiment and potential price movements. The Marubozu candlestick is a robust indicator of market sentiment, often signaling a strong momentum in one direction. It is characterized by a full-bodied candle with little or no wicks at either end, which suggests that the trading session started with buyers or sellers immediately taking control and maintained dominance throughout the session until the close. When a Marubozu candle appears after a period of consolidation or on the chart where the market direction is not well established, it can indicate a potential shift. For instance, a white or green Marubozu suggests strong buying pressure as the price moved from the open to close without significant retracement, indicating that buyers were willing to buy at every price point during the session. Conversely, a black or red Marubozu implies strong selling pressure, showing that sellers were in control from the start to the finish of the trading session, pushing the prices down throughout. One historical scenario where the emergence of a Marubozu candle had significant implications was during trend reversals following long periods of market indecision or consolidation. For example, if after a lengthy phase of sideways movement in a stock's price, a bullish Marubozu appears, it often signifies that the buyers have finally taken control, leading to a potential uptrend. Similarly, a bearish Marubozu appearing at the peak of an uptrend might indicate that sellers have overwhelmed buyers, potentially leading to a downtrend. These patterns serve as a tool for traders to interpret potential shifts in market sentiment, guiding their decisions on entry and exit points in trades. However, it's crucial to consider additional indicators and broader market context, as relying solely on a single candlestick pattern can lead to misinterpretation of market signals. The Marubozu candlestick is a potent pattern in technical analysis that traders often scrutinize for clues on market momentum. With its full-bodied figure, characterized by little to no wicks, it conveys strong buying or selling pressure. The interpretation of a Marubozu, whether signaling a continuation of the current trend or a potential reversal, distinctly hinges on the surrounding market context. In scenarios where a Marubozu forms during a prevailing uptrend, especially a white or green Marubozu reflecting significant buying interest, it may suggest the continuation of the uptrend. This is due to the absence of wicks, which indicates that buyers maintained price control from the open to the close of the trading session. Conversely, a black or red Marubozu appearing in a downtrend, demonstrating strong selling pressure, could imply that the downward trend is likely to persist. However, the appearance of a Marubozu can also signal potential trend reversals. For instance, a green Marubozu emerging at the end of a downtrend could indicate a turning tide, symbolizing strong buying pressure that might overturn the prevailing bearish sentiment. Similarly, a red Marubozu occurring after an uptrend might signal the beginning of a bearish reversal, as sellers dominate the trading activity. To exemplify, let us consider a chart where the price has been declining. Suddenly, a green Marubozu appears. This could potentially mark the beginning of a bullish reversal if other indicators confirm a shift in sentiment. On the other hand, in an uptrend, a green Marubozu strengthens the belief in the continuation of bullish momentum. Yet, traders should remain vigilant, as a sudden red Marubozu in such a scenario might prelude a shift towards a bearish outlook. It is paramount to integrate the Marubozu pattern within a broader analytical framework, considering additional indicators and market factors before drawing conclusions. The essence of its interpretation rests on the principle that the context and preceding trend are critical in deciphering the Marubozu's message, be it one of continuation or reversal. When analyzing a Marubozu, a full-bodied candle with little or no wicks on a chart, it is essential to consider additional indicators such as trading volume, nearby support and resistance levels, and the preceding market trend to fully understand its implications. These factors can significantly reinforce or weaken the significance of a Marubozu pattern within the broader market context. Trading volume plays a pivotal role in validating the Marubozu pattern. A high trading volume accompanying a Marubozu indicates strong buying or selling interest that confirms the pattern's significance. Conversely, if the volume is low, the reliability of the Marubozu as an indicator for future market direction diminishes. The presence of nearby support and resistance levels can also influence the impact of a Marubozu. If a Marubozu breaks through a significant level of support or resistance, it suggests a robust move that could signal the start of a new trend. However, if the Marubozu forms far away from these key levels, its ability to forecast market direction may be less pronounced. Lastly, the preceding market trend is crucial in interpreting a Marubozu. A Marubozu that appears after a period of consolidation may signal the beginning of a strong trend. In contrast, a Marubozu forming at the end of a long trend might indicate exhaustion among buyers or sellers, pointing to a potential reversal. In sum, while a Marubozu is a potent pattern on its own, considering it in conjunction with trading volume, support and resistance levels, and the preceding market trend provides a more comprehensive picture of the market's potential direction. This multi-faceted approach allows traders to make more informed decisions, understanding that these additional factors can either strengthen the signal given by a Marubozu or suggest caution in interpreting its significance. The Marubozu candle is a full-bodied candlestick pattern with little or no wicks, indicating a strong market move in one direction. When it appears, it suggests that buyers or sellers were in control for the entire trading session, from open to close. This pattern can be white, bullish, or black, bearish, pointing toward potential market directions based on its context. Throughout its use, the Marubozu has shown varying levels of reliability in forecasting market directions. For instance, a bullish Marubozu appearing after a period of consolidation or at the end of a downtrend has in several instances accurately signaled a reversal or continuation of the upward trend. Similarly, a bearish Marubozu found at the peak of an uptrend or during sideways market action has often correctly forecasted a forthcoming downtrend. However, like all technical analysis tools, the Marubozu is not without its limitations. Its predictive power is not absolute. There have been instances where Marubozu patterns have appeared, suggesting a strong move, but the market did not follow through in the anticipated direction. This lack of reliability can sometimes lead to false signals, where a Marubozu might indicate a strong move that fails to materialize as expected. It's important to perform a contextual analysis alongside observing Marubozu patterns. Factors such as market conditions, volume, nearby support and resistance levels, and broader economic indicators should be considered. This comprehensive approach helps in mitigating the risk of acting on false signals and enhances the effectiveness of using Marubozu patterns in market prediction. In summary, while the Marubozu can be a powerful tool in forecasting market movements, it should not be used in isolation. A careful analysis of market context and other complementary indicators is essential for making more informed trading and investment decisions. Integrating the Marubozu pattern with other technical analysis tools can enhance the understanding of market trends. For instance, combining Marubozu with the Relative Strength Index, RSI offers insights into whether a security is overbought or oversold. When a bullish Marubozu occurs during a period where the RSI is below 30, it might indicate a potential reversal from oversold conditions. Similarly, the moving average convergence divergence MACD can corroborate the momentum signaled by a Marubozu pattern. If a Marubozu is spotted while the MACD line crosses above the signal line, it can be interpreted as a strong bullish signal. Moreover, Fibonacci retracement levels act as potential support and resistance levels. Observing a Marubozu pattern form near key Fibonacci levels, such as 61.8% or 38.2% retracement, could signal the strength of the market's move and potential continuation or reversal points. A real-world example of this integration could be seen in a stock that forms a bullish Marubozu candle after a prolonged downtrend, coinciding with an RSI reading below 30. This scenario might attract the attention of analysts, suggesting a significant buying interest and a potential trend reversal. If this uptrend is confirmed by an upward crossing in the MACD and alignment with a key Fibonacci retracement level, traders might gain additional confidence in the strength of the market's change in direction. Similarly, the occurrence of a bearish Marubozu candle when the RSI is above 70 may serve as a warning signal of a potential transition to a downtrend. Further validation by a negative MACD crossover and resistance at a Fibonacci level could offer traders a comprehensive view, combining multiple tools for a robust analysis of market conditions. Through these methods, integrating Marubozu patterns with other technical indicators allows for a more nuanced and informed approach to trading and investment decisions. Common errors and misconceptions traders often have about the Marubozu candlestick pattern involve its interpretation and the significance of its appearance in different market contexts. One mistake is assuming that a Marubozu candle guarantees a continuation of the current trend without consideration for other market factors. This assumption can lead to premature trading decisions. Another error is neglecting the importance of the candle's position within the broader market trend. A Marubozu candle at the end of a prolonged trend might not have the same bullish or bearish implication as one that appears at the beginning or in the midst of a trend reversal. Traders sometimes misinterpret the Marubozu as a definitive sign of strong market sentiment, overlooking the potential for it to be a trap set by market makers to induce retail traders into making hasty decisions. To improve pattern recognition and interpretation skills, traders should look at the Marubozu candle in the context of recent market activity to better understand its significance. Pay attention to volume associated with the Marubozu candle, as higher volume can indicate stronger market conviction. Use additional indicators and analysis techniques to confirm the signals suggested by the Marubozu pattern. Practice patience and wait for further confirmation before making trade decisions based on a Marubozu candlestick alone. Consider the overall trend and market conditions, as these can greatly affect the interpretation of the Marubozu candlestick. Improving skills in recognizing and interpreting the Marubozu pattern involves not just understanding its characteristics, but also integrating this knowledge with broader market analysis techniques. The Marubozu pattern, known for its full-bodied candle with little or no wicks, represents a strong trend in one direction without significant pushback from the opposite side. This characteristic makes it a powerful tool in developing trading strategies. When it comes to trading decisions, the Marubozu pattern offers clear insights into market momentum and can be the basis for setting precise entry and exit points. To employ the Marubozu pattern effectively, traders often look for this pattern after a period of consolidation or within a trend as a confirmation of strength. A bullish Marubozu indicates strong buying pressure, suggesting an entry point for a long position could be at the close of this candle with a stop loss set just below its low. This positioning takes advantage of the momentum, aiming to capture further upward movement. On the flip side, a bearish Marubozu signals strong selling pressure. Traders might enter a short position at the close of the candle, placing a stop loss just above its high, prepared to capitalize on the anticipated continuation of the downtrend. Choosing exit points involves monitoring the price action following the Marubozu. If the market continues in the anticipated direction, scaling out of the position and trailing stop losses can help secure profits while giving the trade room to grow. A noteworthy case involves a trader who recognized a bullish Marubozu at the end of a downtrend in a stock. The full-bodied green candle, with virtually no upper or lower shadow, indicated a sudden and significant shift in sentiment. The trader entered a long position at the close of the Marubozu, setting a stop loss below its low to manage risk. Over the next few days, as the upward trend gained momentum, the trader gradually took profits while raising the stop loss. This strategy allowed the trader to maximize gains while protecting against a reversal. Another instance saw a bearish Marubozu appear during an uptrend, suggesting exhaustion among buyers. A trader, recognizing this signal, initiated a short position at the close of the candle, with a stop loss set just above the high of the Marubozu to limit potential loss. The trader benefited from the subsequent decline. The key to success in both cases was not only recognizing the significance of the Marubozu pattern, but also implementing a disciplined approach to managing the trade, adapting to market movements to realize profits while safeguarding against adverse shifts. In summary, the Marubozu pattern is a potent indicator of buying or selling pressure, and when integrated thoughtfully into a trading strategy, can significantly enhance decision-making regarding entry and exit points. Through practical application and strategic risk management, traders can leverage this pattern to navigate market dynamics more effectively. The Marubozu candlestick is a powerful single candle pattern represented by a full-bodied candle with little or no wicks, signaling strong buying or selling pressure throughout the trading session. Variations of the Marubozu candlestick and similar patterns provide nuanced insights into market sentiment and potential price movements. One such variation is the closing Marubozu. Unlike the classic Marubozu pattern, the closing Marubozu has a long body but features a wick at one end. If this wick appears at the upper end in a bullish candle, it indicates that the closing price was near the high of the day, suggesting strong buying interest. Conversely, a wick at the lower end of a bearish candle signifies a close near the low, indicating strong selling pressure. This pattern emphasizes the dominance of either buyers or sellers during the trading session, but acknowledges some resistance or support at one end of the price range. Another pattern closely related to Marubozu is the opening Marubozu, which is characterized by a single wick opposite the direction of the trend. For instance, a bullish opening Marubozu indicates that the price opened at its lowest point and closed near its high, with a wick showing minimal selling pressure at the beginning of the session. This pattern suggests early uncertainty followed by strong buying momentum. In trading scenarios, envision a day on the stock market where a Marubozu candle forms on a company's chart after a significant news release. This signals strong conviction from traders in response to the news, potentially leading to a trend continuation or reversal. A closing Marubozu you might follow in the next sessions, indicating that while the trend remains strong, there's beginning to be some resistance. Understanding these variations can guide traders in refining their entry and exit points. For example, the appearance of a bullish closing Marubozu after a downtrend might suggest a strong reversal signal, offering a potential entry point for buyers. Similarly, a bearish opening Marubozu in an uptrend could warn of a forthcoming decline, suggesting an exit or short selling opportunity. By deciphering these patterns and their implications, traders can make more informed decisions, capitalizing on the momentum they suggest. The key lies in contextualizing these candlestick formations within broader market trends and combining them with other technical indicators for a comprehensive trading strategy.